Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and the banking awareness part of it. Okay. And basically right now we are discussing about the banking history. We had started with the liberalization era and we had looked upon several facts and figures of that particular era. Okay. So basically in this lecture, we are going to continue with the liberalization era. We will look upon the other facts and figures related with the topic. I hope that you have revised the previous lecture before you have come for this lecture. As I told you so many times, it is for your own benefit. Okay. So with this note, let's start this lecture. So the topic we are going to cover is known as the financial knowledge. Okay. And banking awareness part of it. All right. Banking history we are covering. And in the banking history, we are covering the liberalization era. Okay, which was started from 1991 and continues as per today's. Okay, and this is the part of a famous new economic policy which is also known as liberalization, privatization, and globalization. Okay, so basically we are covering the liberalization part, and then we had also covered the privatization and globalization inclusion in the liberalization. Okay, how does these two other facts related with the liberalization what we are covering? Okay, so let's start with the part. So now we are going to cover about the NPA challenges. Increased lending activities also led to the managing non-performing assets, NPA or bad loans. This required banks to improve their risk assessment and assist quality management. Okay, so now NPA, you have got the full form. It is known as non-performing asset. Okay, but before understanding the performing and the non-performing assets, we must understand the asset and the liability of bank. Asset and the liability of a bank. Okay, so basically, first we need to understand the asset. Okay, what do you mean by the word asset? So basically, asset is anything which gives particular return to owner with or without any fixed duration. Okay, so asset is anything which gives a particular return to the owner with or without any fixed duration. Just take an example. Suppose you have bought a share of company XYZ. Is share your asset? Yes, it is asset, because whenever you buy a share, you are entitled to get the interest or dividend on your share. Right? It means that it is a particular return. Interest or dividend is a return which is earning by you. But this is during the fixed duration. Because you are entitled to get the return over your share in, or you can say on monthly basis, on half-yearly basis, on yearly basis, on quarterly basis. Any of these bases you are getting your return or your interest from the XYZ. Either on the monthly basis, means every month you are getting. Half-yearly means after every 6 months you are getting. Yearly means after every year you are getting. Quarterly means after every 3 months within the year you are getting. So it is a fixed duration return. Okay, because the duration is fixed as per the share agreement between you and the XYZ. All right. Now let's talk about the asset without any fixed duration. Okay, suppose this is you. Okay, and you had bought a land of 10 acres. Okay, this 10 acres, when you bought it, was for 10 lakhs. Just an example. Okay, but is it giving you any return? No. If you look that per month you are getting anything from this land, it is not possible till you sold it out or you make any property on it and then you let it on rent. Without this, you will not get any money on fixed period or the fixed duration from this land till you sold it. Okay, so when you bought it, it was cost 10 lakh. But when you sold it after suppose 3 years or 5 years, because there is no fixed duration, okay, then it was sold out at rupees 30 lakhs. You just spent 10 and you earned 30. It means 20 lakhs is your profit or your return. Okay, that's why it is called the asset but without a fixed duration. Okay, because it is not giving you you can say return on the regular basis till you sold it out. Okay, that was the definition of asset. All right, anything which gives a particular return to owner with or without any fixed duration. Okay, now let's talk about the liability. Liability. Okay, it's a duty or responsibility to be discharged towards the creditor with or without fixed duration. Okay, so liability is basically a duty or responsibility to be discharged towards a creditor with or without fixed duration. Just take an example. For the first example, this is XYZ, this is you. You bought a share of it. Okay, then they said that they will give 10% interest to you on monthly basis, yearly basis, half-yearly basis, quarterly basis, whatever the agreement you both have signed with you. Okay, so this 10% is the liability to XYZ. In this case, the XYZ is debtor who took the money and you is the creditor who gave the money. So you are entitled to get the interest from XYZ and XYZ is liable to give the interest to you. Okay, so it is the liability for XYZ but it's the assets for you. Okay, so this is the fixed duration asset or fixed duration liability because you are entitled to get the liability every month, every year, after every 6 months or after every 3 months. Okay, now let's talk about the without fixed duration. Suppose this is you and this is your land, okay, which you have bought for rupees 10 lakh. Okay, then you give this land to some of your friend, your family member and whatsoever, and you didn't specify any particular time period after which you will take on over this land. Okay, no doubt the person who has get a land from you will be use it or not, but it's a liability for him because whenever you ask him back, he has to return this land to you because now you are the owner, he is not the owner. Okay, so this is asset for you but this is liability for him without any fixed duration. So I hope that you have got a little bit idea about the assets and the liability. Okay, now let's talk about the bank. Okay, so for banks, the deposits and the loans, these are the two main activities. Okay, so the deposits are basically the liabilities of bank, whereas the loans are basically the assets of the bank. Okay, because the bank is liable to give the deposited amount to the real owner whenever he required or after a during fixed period of time. But the loan is basically the asset created by the bank on the person who has taken a loan, because this person is required to pay a fixed amount of interest, or you can say fixed interest rate, on periodically basis to the bank. Okay, so this is the asset and liability for the banks. All right, now come to the NPA part. So the non-performing challenges, and you can say non-performing assets, these are basically those loan accounts which have been remained dormant for last 3 months or 90 days. Okay, so these are those loan accounts which have been remained dormant or inactive for last 3 months or 90 days. After this, they are declared as a non-performing asset. Because they are not paying any interest to the bank for which the bank has granted them a loan, and that's why they are not performing their duty and they considered as a NPA. And why these accounts are the challenge for the bank? Let's understand it also. Suppose this is the bank XYZ. After deducting SLR, CRR and the net demand and liability, this bank having 6 lakhs to grant a loan. Okay, then they granted 4 lakhs to various customers, and the 2 lakh rupees has been declared as a NPA. Okay, so the bank will only get 2 lakh as a loan repayment or as a interest entitled. Because the remaining 2 lakhs are on the NPA, it means neither the amount returned nor interest paid. Neither the amount returned nor the interest paid. It means that the interest, which is the income of the bank, not only the back income affected, but also liability affected. Not only the interest has been lost by the bank, okay, but the amount of 2 lakh rupees belongs to the depositors, right? The people who deposited their money with the bank. So in this case, this 2 lakhs has to be paid by the bank to the customer from its own reserves or from whatever the process they will apply. Okay, but this is the bad loan because not the bank earned the money and even they had lost their principal amount. So that's why the NPA challenges occurs. Okay, but after the realization, when we allow the banks to grant loans and their various activities were freed, still we had put a checkout on the NPA because the NPA challenges are too dangerous for the economy. However, we will have a discussion over NPA in detail in the upcoming lectures. Till then, just remember the NPA causes a severe damage to the banking system. Because not only this is a loss of the principal amount, but also the bank's income affected, which may often lead to the collapse of the bank. Okay, and for this we had acts. The most famous is the SARFAESI Act 2002. Okay, even we have the DRT, Debt Recovery Tribunal, and DRAT, Debt Recovery Appellate Tribunal. Okay, about all of these things we will have a discussion in the upcoming lectures. Till then, just remember the point. Okay, thereafter the financial inclusion. What was that? Recognizing the need to bring unbanked and underbanked populations into the formal banking system, government and banks launched financial inclusion initiatives. This included setting up no-frills account and expanding banking services in the rural areas. Now first, let's understand the financial inclusion. What do you mean by it? So in the simple terms, it means basically encouragement to people for having bank accounts. This is a part of financial inclusion. And why it is very, very necessary. We need to understand it too. Then only we will understand the topic properly. Okay. So before understanding properly, we have to understand why the people do not have the bank account. First, they are not aware about benefits of having bank accounts. Second, do not want open bank account. Third, not having capacity to open bank account. These are the three main reasons why the people do not having their bank accounts in the Indian banking system. Okay, so if we talk about the particular one system, which is the not aware about the benefits. Okay, if you go to the remote areas or even some rural areas, okay, then these peoples either not aware about the services, and second thing you can say, they were not a part of Indian economic growth. Directly they were not the part of. So they mostly not aware about the loan facility they could get, security they could get, okay, interest they could get, all right, and even if they want to make a time deposits, how they could get, okay, savings and benefits, credit card facilities, overdraft facilities, all these facilities which are provided by the banks. There are chances that these peoples are not aware about it because of the remote areas and the rural areas, and lack of education is one of the most foremost, you can say, the reason for this. Okay, because me and you are discussing over it, it's a part of education. But most of these people do not get a better chances to understand this topic properly. So that's why they are not aware about the things. That was the first reason. Okay. Now, if we talk about the second reason, which is do not want to open a bank account. So you will ask me, is it possible that some person do not want to open a bank account? Even of the large number of opportunities he could get from the banks in returns. Okay, so there are two main chances for it. The first chance is that corruption. Okay, Second is bank's credibility. Okay, these are the two main chances. If we talk about the corruption, is the first chance. Okay, so just take an example. Suppose that is a person who is earning rupees 10 lakhs. Okay, and these 10 lakhs is earning by him in the cash form. Okay, so basically, if he is earning tax 10 lakhs and his expenditure is only for rupees 5 lakhs, which means rupees 5 lakhs has been saved by him. All right. So why he is not depositing this amount to the bank, and he will even get an interest on it, and the amount is bigger, so means the interest will also the bigger amount. Then why he is not doing the thing? Because if he go to the bank and he submitted this 5 lakhs to the bank on the regular basis, on the periodical basis, then he has to give the tax and he has to certify it from where he is earning the money. All right. So this may attract some taxes on him and he wants to avoid it. So this is the case of corruption and the black money, why the people do not want to open their bank account. And they prefer having the amount in cash, because on cash, their income could not be traced easily. And then they show their income lower so that they could pay only least amount of taxes. And that's how the black money increases in the market. Okay. Thereafter, the second reason is the reason of bank credibility. Okay. Suppose this is the person U, and there are 3 banks, A, B, and C. This is U. Okay, you having rupees 5 lakhs with you as a saving. Okay, you want to deposit these amount to the banks for the security and for the payment of interest which you will receive on the regular basis. But what happens? Bank B collapsed, Bank C collapsed, and now you have option A. But when you see the other 2 banks collapsed, then you will have a credibility doubt on A. Is that bank will also collapse? And this is a human nature, because you are noticing that the other people who having their account with B and C are suffering. So instead of deposited your amount with A, you will prefer to keep the amount with you. Okay, that was the reason of bank credibility. And when we are talking about 1991 and before it, then that was a time when the many banks were collapsing and the economy was suffering. So that's why people do not want their money to be deposited in the banks, and then the banks will declare as an insolvent and they won't get their money back. Even today, the government has taken so many steps so that the customer or the depositor who is submitting his money with the bank could get justified that his money is safe. All right. We will have a discussion over these steps in the upcoming lectures. All right. Now, the third one is the not having capacity to the bank account. Open the bank account. Why? What is that? So basically, when the private players entered in the market, they had designed a criteria which is known as minimum deposit requirement. And what was that? It means that the bank asks the customer to keep certain amount with bank as a minimum deposit requirement. Okay, and let me give you an example of this. Suppose this is a bank called XYZ. It is a private bank. Okay, So if you have noticed, whenever you opened your accounts in the private banks, they asked you to keep rupees 10,000 at least every time in the bank, and this is known as the minimum deposit requirement. Okay, if you are not keeping rupees 10,000 with banks, then you will attract a charges for not meeting the minimum deposit requirements. Okay, and whenever you will submit or deposit any money in that account, might be your money will deducted in the name of charges and the fines from your bank account. That is commonly happen, right? So that's why it is known as the minimum deposit requirements. Now let's have a look why this thing is important and why the private players do it. Suppose this is the bank XYZ. Okay, banks required a money from customer. Why? Because bank use your money to grant a loans, and then they will earn a interest over it. Okay, but if it's not having a money with itself, then how they will grant a loan? Suppose XYZ requires rupees 10 lakhs as a deposit with itself, then only he could issue the loans to the people. Okay, it is the source of loans from his side, and then they are earning the interest on it. Okay, but if the customers taking out and withdrawing their money occasionally and oftenly, then rupees 5 lakhs is only the deposited capped with XYZ. Requirement is 10 lakh, only 5 lakh they having, so they attracting loss and not the profit they were expecting. Okay, so to counter this situation, they will ask their customers to maintain the minimum deposit requirement. It means that they will analyze the rupees 5 lakhs arrangement and they will ask their customers to maintain at least some certain amount like rupees 10,000 or rupees 50,000, whatever the amount will be come out after the analysis. They will ask their customers to keep at least this amount in their bank as a minimum deposit requirement. And if the customer fails to do, then the interest will be charged on his account for not maintaining the minimum deposit requirements. It is often done by the private banks, and the reason I had told you why. Because in the public banks, the government is funding them, right? Funding them. Okay, so if even they suffer a loss or having any trouble with loan amount availability, then in this scenario, they are financed by the government, right? The government finance them. But in the private banks, it is not available. They are mainly dependent upon their profit and losses for their survival. That's why they ask to maintain a minimum deposit requirement or MDR, so at least their requirements could be met. Okay, but why is the problem for the customer? Why? So let me tell you one thing. Suppose you are only earning rupees 25,000 per month. Okay, then I ask you, at least keep rupees 10,000 in your bank as MDR. So it is feasible for the customer. And if we talk about the poor section of society, or you can say marginal section of society, who could not afford keeping rupees 10,000 every time in their banks as MDR. So what will happen? They will avoid the banks. Because they are not able to meet up the minimum deposit requirement criteria. All right. And this will lead to financial exclusion. Because when they do not have their accounts with the bank, they will not entitled to get loans and other facilities from the bank. And if they are not getting the facilities from the formal sector or the banking sector, then they will move to the informal sector or money lenders. And then they could be exploited. Okay, and so many things could be happen with them. All right. So basically the government had to focus on it, and then we introduce a no frills account, and it is also known as zero balance account. Now what is this? So basically the no frills account and the zero balance accounts are the accounts in which there is no minimum deposit requirement criteria. You will be not asked by the bank to at least keep some amount in your account. Okay. So when the new no frills account introduced, the marginalized and the poor sections who are not able to meet up the MDR were encouraged to open bank accounts, because now they are not required to maintain at least some amount in their account so that their account will function. Okay, and this leads them to exploring offers of banking sector. Okay, so that's how the financial inclusion worked out due to the liberalization. Okay, so students, in this lecture we had discussed the two main points of the NPA and the financial inclusion. Okay, so basically in the next lecture we will continue with the liberalization era. Some points are left which we will cover in the next lecture. Till then, just revise financial inclusion and the NPA so that you will be able to grasp the facts and figures in the next lecture properly. With this note, let's end this lecture and thank you.